Welcome to Gladstone Associates Provident. We are excited to bring you our weekly report with the latest news and updates in the financial world. In this video, we will share relevant information about the global market, investment strategies, and other topics of interest to our clients and followers around the world. This week has been a roller coaster ride in the markets, starting with the S&P 500 index, which closed lower despite Friday's rally. Federal Reserve Chairman Jerome Powell suggested that the pivot to rate cuts might not come as soon as expected, creating market uncertainty. In addition, U.S. Treasury Secretary Janet Yellen gave notice in a letter to congressional leaders that the agency may not be able to meet its debt obligations as soon as June 1st. Regulators took control of First Republic Bank in California, and J.P. Morgan Chase acquired most of its assets, while deposits not covered by federal insurance suffered no losses. This raises concerns about the possibility of further bank failures and the credit pressures that could arise if the economy stagnates and unemployment rises. The U.S. Federal Reserve raised interest rates by 25 basis points to between 5% and 5.25%. At the press conference, Fed Chairman Powell implied that the interest rate hike cycle is nearing its peak. He also stressed that monetary policy will depend on incoming data and economic developments. The U.S. Department of Labor revealed that the labor market remains tight, with the number of job openings declining for the third consecutive month. However, the economy added 253,000 new jobs during April, beating estimates and demonstrating the strength of the labor market. In addition, average hourly earnings rose by 0.5% month-on-month. Although layoffs increased in March, the labor market remains a source of strength for the economy.
In Europe, they report that the European Central Bank, ECB, has decided to raise its key interest rate by a quarter point to 3.25% to meet market expectations. This increase is the fourth so far this year and is expected to be the last. In addition, the ECB has announced that it will end its program of reinvesting the money from its bond purchases in July. ECB President Christine Lagarde stated that the ECB's monetary policy will remain tight until inflation falls below the 2% target. Although some policymakers had suggested an increase of 0.5 percentage point, the Governing Council also expressed concern about the turmoil in the banking sector and its possible impact on lending to the economy. The president of the ECB made it clear that there would be no pause in raising interest rates and that there was more work to be done in this respect. The latest economic data from the euro area. According to official figures, inflation in April rose to 7% year-on-year from 6.9% in March. However, the underlying rate, which excludes some volatile components such as food, energy, alcohol, and tobacco, unexpectedly fell to 5.6%. In addition, the euro area labor market has become more difficult, with the unemployment rate falling to 6.5%. In particular, in Germany, the unemployment rate stood at 2.8%, the lowest level in the entire euro area. Britain's financial sectors see signs of recovery in the housing market. According to the latest data, mortgages for house purchase have increased for the second month in a row, with a total of 52,011 approvals in March. This is a very encouraging figure, representing a sharp rise from February's 44,126, and is the highest figure since October.
Chinese equities ended mixed after a holiday week, due to weak manufacturing data. The Shanghai Stock Exchange Index rose 0.34%, while the CSI 300 Index fell 0.3% in local currency terms. Financial markets in mainland China were closed from Monday to Wednesday for the Labor Day holiday. El PMI Manufacturero Oficial de China Caio a 49, 2 en Abril frente a 51, 9 en marzo, lo que sup 1 una vuelta a la contracción por primera vez desde diciembre, después de que piquen abandonara su política de cero COVID. During the 5-day holiday, domestic tourism recovered to pre-pandemic levels. Between Saturday and Wednesday last week, 274 million trips were made, 71% more than the previous year, according to the Ministry of Culture and Tourism. Holiday spending was up 129% on the previous year. The latest figures fueled optimism that a sustained recovery in the services sector could help offset weakness in the manufacturing sector and a fragile recovery in the housing market.
Thank you for watching our video. If you would like to learn more about our services, please feel free to contact us at Gladstone Associates Provident. Also, you can follow us on our social networks to stay up to date with our latest news and updates.